Hello, everybody. Welcome to another episode of Simply Bitcoin IRL. I'm very excited for this episode. Today's special guest is Peter Dunworth. Looking forward to it. But before we jump into the show, into the interview, I want to give a very quick shout out to the Bitcoin company that makes Simply Bitcoin IRL possible. Swan Bitcoin. It's the best place to build your Bitcoin stack. It's literally being built by Bitcoiners. It's for Bitcoiners. They incentivize you to dollar cost average. They also incentivize you. They encourage you to take self-custody. If you haven't already done so, check out swanbitcoin.com today. And if you go to swan.com/simply and you sign up using that referral link, you'll get, I think, $10 in Bitcoin for free. That's $10 worth of sats. That's awesome. Anyways, no more delay. Let's bring up Peter. Peter, how you doing today? How's it's crazy in Bitcoin land. Like every week, something different is happening. It's just, I feel like everything's happening at 1,000,000 miles an hour. So where's your head at? How's your experience? Where are you in the Bitcoin roller coaster?
You know what, that's such an apt description of what it feels like being in Bitcoin. So apologies for that going off in the background. But you know what, I share that sentiment. Things happen so quickly. There's so much happening. Everything's moving so quickly. There's, constant feedback, change, updates that you need to think about. But on a personal level, owning Bitcoin gives me a certain peace of mind and calm that, there feels like we're in the middle of a hurricane, financially and socially. But there's a great deal of calm and zen that comes with owning Bitcoin and being invested in it. So for me, life is beautiful.
Yeah, and let's talk about that because Opti refers that, I think you were just describing Bitcoin Zen, right?
Yeah.
So Opti calls that Bitcoin Zen. He's popping up in the thing, and it's this concept, and it's this idea where you see the world around you kind of disintegrating, right? You see the late stage fiat, I would call it, right?
Yeah.
Some people describe it as clown world. I think that, if you put the conspiracy theories aside and all the crazy stuff, I think you're just seeing a world with misaligned incentives, right? And
Yes.
it's starting to break apart. And I think that you're seeing the end result of that. And it's just very interesting to see. But at the same time, you hit the nail on the head. We're kind of protected by this orange force field of hope and peace and prosperity, rules without rulers. And it's just, your energy, your time, your work is going to be protected no matter what.
Yeah.
So is that what you're describing? Is that what gives you this peace of mind in this world of chaos?
Exactly right. And it's funny, it takes a long time to get there, and there's a lot of learning to do, a lot of pain to go through in order to understand that. But if you're here for the long haul, I'm sure everyone gets to that point in time that there is a sense of satisfaction and calm around being heavily invested in Bitcoin. And one of the things I talk about is I think Bitcoin's one of the it's the only thing I think that has the ability, to your point earlier, to align incentives for 8 billion people. And at the same time, I think one of the very unique things about Bitcoin is if you look at human needs and you look at the Maslow's needs hierarchy, I think Bitcoin is the fastest way for individuals to scale up that. And ironically, the longer you're in Bitcoin, the higher up that scale of Maslow's needs hierarchy you go. And ultimately, the top is self-actualization, which is basically a state of Zen in what OP is describing as Bitcoin Zen. So ironic that all of those things sort of tie into each other. But at the same time, when you do a lot of work on Bitcoin, you realize that that's, I guess, the primary function of what's going to be the end result.
And let me ask you something, because you said it does take quite a while to learn. And would it be safe to say that it's not just a process of learning, but it's also a process of unlearning some things? And the analogy that I always use is this concept of the fiat matrix, right? If you spend a lot of time in the fiat matrix, right? Always referencing the original Matrix movie, Matrix number 1. And, Neo gets woken up and he kind of freaks out and he's like, whoa, like this isn't real, and he kind of passes out. And then the next scene, he wakes up and he realizes, holy crap, like, this thing is real. And Morpheus is like looking above him and he's looking down. He says, Neo, I have to apologize. After a certain age, we don't wake people up from the Matrix because it's too much for their mind to handle. And I think it's such a proper analogy to what's going on, because I think a lot of people, the comfort, the convenience of outsourcing the personal responsibility of their wealth to a third party. Um, if you've lived in that world for a long time, right, this idea of self custody, this idea of a non state money, this idea of a money that's not issued by a central bank, there's no customer support line. In terms of the Overton window, it's a very radical idea. It's very out there to the vast majority of the world population. Obviously, that's changing, right? With BlackRock coming in, with amazing companies like Swan, of course, simply we're beating the battle drum. But there's people working, there's entrepreneurs, and there's Bitcoiners that are working actively to solve this problem, break the Bitcoin echo chamber, so to speak. But what would you say to that? Is this not only a process of learning, but perhaps unlearning for some people?
I know for me personally, it was a process of unlearning. Like 25 years of traditional finance education and training, accounting and finance degree, equivalent of a master's in superannuation, which is the equivalent to your 401k pension system. And, I was the prime example that, there was so many things I had to unlearn because it fundamentally breaks the mold of, the traditional education. And, education is basically a process you go through to learn things. And our financial system is built on the premise that, without getting too technical, but we've got fundamentally a risk-free rate, which is set by the US Federal Reserve. And that dictates basically the risk-free rate for the world. And then all of our financial models and structures and valuation and risk metrics are basically built around that risk-free model. So Bitcoin is a complete paradigm shift. It turns everything on its head. And, to your point earlier about, sort of being woken up, I can tell you the thought of, for most people of being, completely responsible for all of your net assets that you hold in Bitcoin, in one word, would be terrifying for most people. So this is where, the Bitcoiners who are here today, I think, are a very unique breed in that, they're effectively on the forefront of, their frontier rangers, basically beating new paths of financial freedom and self-autonomy. So in a word, it's terrifying for the majority of the population, but I guess part of our job is to highlight the benefits of being self-sovereign and taking control and ownership of that. And then on a broader sense, basically building out products that scale to the rest of the population, because I think we've got such a small percentage of the population on board now. And this is where there's the opportunity to basically onboard the rest of the 99% of the population or more that's not in Bitcoin now.
Yeah, 100%. And I kind of want to focus on that the idea, or not the idea, but what you were bringing up earlier, which is you came from this traditional financial background. What made you wake up, so to speak? What made you realize, okay, there's something wrong here? And what was it that initially attracted you to an alternative, being Bitcoin?
Well, 12 years ago, I had my brother tell me that I should buy some Bitcoin, and it was $3. And I told him that would never work. That's a stupid idea. Government will shut it down. And, you can literally go through the list of, objections that most people have before Bitcoin. And it's a very painful lesson to discuss, but I like sharing it because it's an opportunity, hopefully, for everyone else to learn from my mistakes in not getting on board sooner. But Michael was very patient with me and educating me. He ran a Bitcoin exchange in San Francisco from 2013 onwards. And, being so close to him, every other day I'd be calling him, asking him questions as to why it won't work, and sort of prodding. And I'm sad to say that I'm a very slow learner, and it took me 5 years to figure out that it's nice to, it was an investable asset. But once I understood that it was an investable asset, then we started talking to clients about that too. So only in a very modest way, but because that's all we're allowed to do. But it was just a lot of learning, and that's the problem. That not only did I have to learn about Bitcoin, but I had to suspend all of the things that I knew about the traditional finance system in order to get it. And this is where I think probably the key problem for most people to understand this is that this is fundamentally a tech innovation, not a finance innovation. It is a finance innovation, but it's a tech innovation first. And this is where, to give myself some slack, that I consider the tech guys to be a lot smarter than the finance guys. And so the tech guys pick up Bitcoin far faster than the finance guys. And so this is where I was very fortunate with my brother to basically have Michael's very tech oriented, I'm very finance focused. I had the great pleasure of basically being able to learn from him and hear his insights from a technical perspective or technological perspective.
So why doesn't the average, I say average, but maybe that's a derogatory term. Let's say the everyday financial advisor. I'll give you an example. I grew up with one of my friends from high school. We grew up together, and he works in TradFi. He works for one of the big firms. He works at Goldman, and he climbed up the ladder, very successful, very well paid. But I swear, if I bring up the idea to Bitcoin to him, it's like I'm like putting up garlic, and he's a vampire. He's like, no, like it's terrible. And I never forget one of the things that he told me. He says, like, people, when I told him, you get down the rabbit hole conversations. And one of the things he told me, I thought I brought up the Federal Reserve or went something along those lines. And I never forget what he told me. He's like, the people need monetary policy. And I heard him say that. I'm like, whoa, you're totally bought into this thing.
You dictator, you commie, you.
You call us a cult. You're in a cult, bro. So that was very striking. So my question to you is, why do you believe that most of I know it's changing with BlackRock and Fidelity and all that stuff, but why do you believe most financial advisors are just so against this thing? They're not comfortable recommending this to their clients.
Oh, look, to your friend, here's the ironic thing. I think the fact that Bitcoin is going to dislocate so many people in finance should be a clear indication to your friend that he should heavily invest in it, for the fact that his financial position and standing, his job, his livelihood could be disrupted dramatically, effectively dislodged from his position. So just as a hedge, he should have a lot of Bitcoin to save him from that eventual fate. When it comes to financial advisors, I think there are sort of three things that are difficult for traditional financial advisors to get their head around that takes an enormous amount of work. Firstly, there is an enormous amount of work to understand Bitcoin. I don't think 100 hours really cuts it. It's, for me, it's a lot closer to 1,000, maybe more, to really comprehend what this thing is and understand it on a deeper level. I think there's the convergence of tech and finance. So, because it is fundamentally technology, not finance, there's a different skill set that, finance guys just don't have technical nous. The second or third thing is traditional education and training basically, in some way, shape or form, creates norms that we accept. So I mentioned briefly the risk-free rate. A lot of financial modeling, risk management, and the rest of it basically revolves around the risk-free rate. And Bitcoin doesn't have a risk-free rate. So how do we value it? How do we value this thing, if it's not throwing off any cash flows? A lot of the financial advice world and, investment advisors basically take their lead from Warren Buffett. And, he doesn't invest in commodities. He has, but he doesn't really like investing in commodities because there's no way of valuing those things other than supply demand. And they don't have cash flows, which enable him to model how valuable that business should be. So he doesn't invest in those things that don't throw off cash flows, and Bitcoin doesn't throw off a cash flow. So to a lot of finance guys, they look at this as a pet rock. What does this thing do? It doesn't really do anything. And ironically, that's the feature, not the bug. But finally, and this is probably the biggest reason for a lot of the investment advisors not advising on this, is that their licensees basically don't allow them to advise on Bitcoin. Now, it's not a financial product across the globe. So in the US, it's not a financial product. It's classified as a commodity. In Australia, it's not a financial product. In the UK, it's not a financial product either. So those licenses and the professional indemnity that cover them from any malpractice basically cover them for financial products. So if Bitcoin's not classified as a financial product, it's very difficult for them to advise on. So that's probably the three main reasons I think that the finance world has huge difficulty advising on it. And this, to me, is why the Larry Fink the ETF lodgement with BlackRock is such huge news. This is where it totally redefines from a career perspective. It's not a career-ending move to advise on Bitcoin now. It also solves the ESG FUD because Larry is probably the major proponent of getting ESG across corporate America and corporate globally. So there are so many huge things coming out of that ETF with BlackRock that it basically makes Bitcoin a safe asset now to advise on, and this is where the next 5 years is going to totally redefine that investment advice space.
Gotcha. And what do you think it will take? What do you think needs to happen for that to change? Was BlackRock the catalyst? Is Fidelity the catalyst? Where do you see? Because this is the way I see it, Peter. Perhaps this is naive of me, right? I'm thinking they can just sweep this under the rug for so long. It will get to a point where their own clients are going to be up in arms and saying, "Look, like the fact that you didn't advise me to put 0.5 or 1% of my portfolio in this 5 years ago, you cost me a lot of money with very little downside." Right.
Yes.
So what do you see a change in the wins? Like where do you see this going? Is there perhaps some influence from the government that is just like not encouraging this type of alternative asset as they would see it? Of course, we just see it as the only asset. But what's your take on that?
There are just so many moving parts to that. The governments really are incentivized not to push this. Operation Choke Point 2.0, which you're experiencing in the US, we've got something similar in Australia happening now where they're fundamentally trying to limit the amount of cash that you can send to exchanges. Our major bank in Australia has just limited it to $10,000 a month. So we've got clients who are literally just moving their banking to alternative institutions who don't rate limit how much they can send to an exchange, which I think just creates an enormous amount of angst. And it's kind of like a Streisand effect that, we're going to limit you and how much you can move out to, buy Bitcoin. And we don't want you to do that. So we'll rate limit you, which basically means the banks are going to lose their clients. They're going to move to institutions who allow them to do it. And this is where, basically the Streisand effect of, what they're trying to avoid is going to come to fruition, and it's probably going to make this happen faster. So I think there are just so many moving parts when it comes to investment advice. There are so many things that financial advisors, investment advisors basically have to adhere to. It's very heavily regulated. So to step outside and really advise on anything but what they're allowed to advise on represents effectively a career-ending risk for them. And this is why they haven't done it up until this point. And this is where, to your point earlier, clients are going to be really pissed at them because they see this thing going up and they want to be on board. And the limitation is not with the advisor, it's typically with the licensee who authorizes what are the available investments. And so there are many advisors we deal with who would love to advise on Bitcoin, but they're prohibited from doing so because their license doesn't allow it. And they're not prepared to potentially risk their income, their livelihood, on giving an asset allocation of even 1 to 2% to Bitcoin. And I understand the risks and the trade-offs they're taking, but from a client perspective, excuse me, it's horrible because a 1 to 2% allocation over the next 10 years, I believe, can have life-changing benefits to that client, and it can completely redefine their entire wealth. So for investment advisors to do this, they need to take a career risk in advising on it at the moment. And this is where Larry and BlackRock is such a huge thing. And, it totally redefines the market because now there is not a career risk in doing it. And also from a top-down approach, because BlackRock is basically in every licensee investment advisor across the globe, now that they have a product selling Bitcoin, all of a sudden that's now on the approved product list for every investment advisor and financial advisor to sell globally. So now there's no career risk. So that can't be understated. And I think, across the globe, investment advisors maybe advise on somewhere between 50 and $100 trillion worth of assets. And,
And okay, so interesting. Okay. I have a question for you. A little bit of a change up.
Mm-hmm.
So I had Caitlin Long and Larry Lepard on, I think it was either last week or the week before, and I had Foss and Lavish on as well. And I asked him about the BlackRock ETF. And to my surprise, Caitlin and Lawrence said they're going to rehypothecate. They're going to create paper Bitcoin. Lavish and Foss said, no, that's impossible. That's the whole point of an ETF. You can withdraw to spot ETF. So, and there's like a bit of a debate there, which I thought was fascinating. What's your take? Is BlackRock going to rehypothecate Bitcoin, Peter? Or do you believe in the whole... I come from the, I'm a millennial. We've gotten, my generation just got screwed with the money printing. So forgive me if I'm paranoid when BlackRock, out of all places, out of any institutions, is just, the public perception of this financial is evil. ESG, like what are they doing? They own the world. So I'm a little bit paranoid. I'm like, yeah, they're going to definitely do the whole paper Bitcoin thing. So, as a financial advisor, someone who comes from that world, what's your take on that?
You know what? One of my sort of standards for determining what will happen and what won't happen is show me the incentive, I'll show you the outcome. Are they incentivized to rehypothecate?
Absolutely.
Yeah. Then... on the balance of probabilities, then we can assume that they're going to rehypothecate. Now, one thing that I think is going to become critically clear to them is that if they do that, they are going to risk catastrophic failure. And we only need to look back, over the last 12 months to see what sort of carnage happened in basically the Bitcoin/crypto markets for people who want to rehypothecate. We saw effectively Terra Luna blow up. We saw Genesis blow up, BlockFi blow up, Celsius blow up. The list goes on. FTX blow up. It represents a catastrophic failure. And this is where their risk management team, I think, needs to really understand the level of catastrophic failure that this digital bearer asset can inflict. And this is where I think they will approach this very differently if they've got any study in this space at all. Personally, I wouldn't be rehypothecating because it is... Although the short-term gains may be appealing and lucrative, the long-term game basically only ends one way. It ends in tears. And this is where, from a personal point of view, I hope BlackRock doesn't rehypothecate, because it could lead to a catastrophic failure across the markets. And this is where, for me, I would like to think that they're better than that and they won't rehypothecate, but the incentives are that they can, make a few more basis points by rehypothecating. So there's probably a backdoor in that ETF application that they will justify basically being able to do that. However, if they do that, they need to be prepared that rehypothecation of the Bitcoin ETF could blow up their entire business. And I don't know if that's a risk they're willing to take. So that's a great question, to be in the middle of those two and to sit on the fence right between those two groups of powerhouses.
I was just observing, and I was
tap dance through the middle of those two.
I had the privilege of being able to. I was able to host a debate on the Swan channel, and I put them together, and I said, Foss and Lawrence, like, what do you think? And they were like, they had their different perspectives and whatnot. And it was just a fascinating conversation. But I completely agree with you, right? Show me the incentives, and that's the outcome. And I completely agree. I just, they're incentivized to do it. But perhaps, for people in the audience that are not well versed in this, why would it lead to, because we know, for example, in the gold market, a lot of rehypothecation takes place, but that's because of the physical properties of gold and how difficult it is to take self-custody of it. Could you explain a little bit why it's so different in Bitcoin, why it would lead to a potential blow up? What is it about Bitcoin that makes rehypothecation a lot more riskier than doing it with something like gold?
That's a great question. There's a lot to that. So the problem for BlackRock to do rehypothecation is, firstly, they don't control the market. So the majority of Bitcoin sits off exchanges. So there's no centralized point of failure. There's no centralized housing of Bitcoin. It's completely it's not completely decentralized, but the majority of the Bitcoins available right now are basically distributed across multiple multiple people or institutions that basically self-custody that Bitcoin. So I think, and this is just plucking numbers out of the air, but let's just say it's roughly 14 or 15 million out of a total of 21 million. So you're looking at roughly 75% of all Bitcoin available are sitting in self-custody. Now, if that's the case, that's not the case in gold. Basically, all gold, well, the majority of gold is basically sitting in central repositories, and you can basically do whatever you want to that because there's no way to assess the ledger that gold in those central repositories has. And this is the difference between Bitcoin and gold, is that everyone on Earth who has an internet connection can verify basically the total number of Bitcoin, and they can verify that they're holding their own Bitcoin. And so that is totally verifiable. Whereas with gold, there is absolutely no way of firstly verifying how much there is, who's got what, and whether or not the gold you're holding is actually real gold or it's just a tungsten bar covered in gold. Now, Chinese banks basically discovered the hard way by someone basically wrapping tungsten in gold and getting a 4 billion loan against it, I think back in 2019, that, it's very difficult to verify if you're actually holding gold or if you've just got tungsten. So for that reason, and understanding the dynamics of the gold market, gold is very easily rehypothecated because it's so opaque and there's no real accounting or verifiability to it on many levels. Compare that, the juxtaposition to Bitcoin is that you can verify absolutely everything happening on the network at any point in time. And this is where I call Bitcoin, basically it's triple entry accounting. It's an upgrade on our double entry system because it's triple entry ledger, because anyone with a node can basically assess everything that's happening on the network and that has ever happened on the network up until that point in time. So it's a very unique technology that is something that we haven't seen before. And this is what makes Bitcoin far more resilient to rehypothecation and, for want of a better term, fuckery in price discovery markets. So this is where BlackRock is going to have a huge problem when they understand, the backfill to Bitcoin and the benefits that it has, in able to manipulate and rehypothecate the markets, because it's not like the gold markets. It's a completely different beast.
Gotcha. Yeah, no, and I completely agree with you. And the question is, though, right, is are they aware of that? Are their executives aware of that? That to me is an interesting question. Are they aware that there's no bailouts here, right?
That's the $1 million question. I really hope they have smart people working with them, because it is going to cause carnage if they don't. So let's just play this out. There are sort of two examples. They take the moral high road. They do everything that we don't expect them to do. They don't rehypothecate. They just have a great business running an ETF on Bitcoin. That's probably the best outcome that we can see over the next 5 or 10 years. I expect they'll basically take probably somewhere between 600,000 and 700,000 Bitcoins into their ETF, and they'll become the largest ETF. They'll outsize Grayscale. Basically that'll take, Bitcoins on exchange from 2 million to 1.3, give or take. That's the best case scenario. In a worst case scenario, they've got stupid people working for them who think they can basically pick up pennies in front of a steamroller and make a few more basis points by rehypothecating that Bitcoin. And I'm just wondering if Larry is smart enough to figure out whether or not these few basis points that they're going to make is going to be worthwhile a total catastrophic failure of the business. And this is where I really hope that, Larry seeks out the advice and guidance of Michael Saylor, because I think he's, one of our best risk managers and understands this better than just about anyone in the space from a financial perspective, and the convergence of the stock market and the risks that happen from a corporate level in holding Bitcoin. So fingers crossed Larry basically listens to some smart people and says, look, the pennies aren't worth it. So, yeah.
Yeah. And it kind of reminds me, like, on a smaller scale, right? It's people, unfortunately, everyone wants more Bitcoin, but the people who are chasing the 2 or 3% yield on those products, and then it's like what Bitcoin was returning historically 250%. The next 10 years, on the conservative end, it's like 50% every year. if you kind of zoom out, so you're chasing 3 to 4%, and then giving up custody of your coins in the process. I kind of see it the same way, right? It's like you just those percentage points, but this thing is crazy anyhow. So I kind of wanted to ask you this before I move on to, I think, the big question, what I'm looking forward to, because I heard Dell talk to me about this for the longest time, and I want to hear from you directly. But before I get there, I wanted to ask you about, so the bull market of 2021, 2022. A lot of
Yes.
people were expecting 100K Bitcoin. I myself was in that camp. I have my own theories, more so rather than FTX selling paper Bitcoin and all that. I really believe that the China mining ban played a huge role in
Yes.
kind of really taking the momentum out of the market. I've brought this up many times on the show. If you look at the hash rate and the price, it's directly correlated. The hash rate falls, price falls. Obviously, those miners have to sell Bitcoin in order to physically relocate to other friendlier jurisdictions. Most of them relocated to Texas. So I wanted to get your take. Were you on the camp? Were you expecting 100K Bitcoin in 2021, 2022? And if you were, why do you think we didn't hit that price target? I truly believe it was meant to hit 100K. I think that we got a neutered bull market in my beliefs.
I couldn't agree more with you on that. I think we were ripped off, and I think there was a lot of foul play at hand. I think the first sort of stumble in that bull market was China banning Bitcoin mining, and I couldn't just help but think back to the 2017 South Park China banned Bitcoin meme that is one of my all-time favorites. I'm like, oh shit, this again, right? Okay, oh, they're banning China. Oh, China's banning Bitcoin mining. Oh, okay, right. Like, this is just what they've said it so many times. It's a yawn fest, but it was actually a big deal. Basically the network hash rate went from 183 down to 84 exahashes in the space of 2 or 3 weeks, which, in any other network would have been a catastrophic failure. But what happened with Bitcoin, basically blocks went from taking 2 weeks to 3 weeks. And within 3 months, we'd basically solved through that problem. And what was, a huge bonus, I think, on the side of things is that basically reduced the concern around a 51% attack to me. We basically had a 51% attack where 51% of the network or more basically shut down and had to be relocated. And the Bitcoin network basically kept functioning. It was slow and expensive, but it basically kept functioning. So that was a huge win. Now, when it comes to the price discovery that I expected to see towards the back end of 21, I think we were completely ripped off by fraudulent actors in that space. And I put that down to FTX, I think, is probably the biggest reason in the marketplace that we didn't achieve $100,000 Bitcoin. And what shocks me in light of what I learned about what happened with FTX is that, we got to 70,000 roughly, which is 70% of, a minimum target that I would have expected for that bull run. And I think in light of what they were doing, so FTX was one of the biggest exchanges in the world at the time. Someone who does on-chain analysis can basically tell me these numbers, but roughly speaking, they were responsible for somewhere between 10 and 20% of total global trade in Bitcoin. And what they were doing was they were basically selling their clients Bitcoin, storing it on exchange, lending it out to Alameda immediately, where Alameda would put that Bitcoin back on the exchange and sell it, and then go and buy altcoins with it. Now, that merry-go-round of a transaction basically has 2 effects. Firstly, it is a huge price suppression for the price of Bitcoin. And it's also a huge outperformance for the altcoins. So at the same time that the Bitcoin price was being suppressed, the altcoins were outperforming massively. And this is where, when you understand that price is determined at the margin, if you've got 10 to 15% of global trade not really trading and effectively being rehypothecated, which is exactly what they did, then there's no chance we can get a parabolic blow off top like we did in 2017. It just doesn't happen. Like, price is determined at the margin, where a 3%, variance can have that parabolic spike effect. And so when you've got 10 to 20% of the market being rehypothecated and not really being put into cold storage, and there's sell pressure of that much sell pressure, I think absolutely we would have, it's my opinion that we would have hit 100K easily. And I had a much higher price target on that I thought it could have gone parabolic still. So I'm hoping that what we went through in 21 has basically cleaned out a lot of bad actors. I think there's still a number of question marks across the industry, but this is where it's so vital that if you want to see true price discovery in Bitcoin, it's critical that you self-custody your Bitcoin so that the exchanges and bad faith actors in the space don't have the opportunity to rehypothecate.
Do you believe that's possible? Do you believe that, the everyday individual, um, the like just I see it with my mom. Like, my mom's a hardcore Bitcoiner. She's been stacking since 2016. She has multi-sig geographically separated as is cold storage. Like literally it's cold storage.
Nuts.
However, if I told her, "Hey, could you send me a Bitcoin transaction, mom?" She'd be like, "I have no idea how to do that." And I'm going to have to be the Uncle Jim in that situation and then kind of do it for her, right? So, I guess my question is, do you see a world where people, because look, if you take care of a child, if you can open a bank account, right? If you can send a wire transfer, like you could write down 12 words. But
Yeah.
at the same time, we live in this world of like hyper convenience. You could just pull up an app on your phone and you can have food delivered to your door. You can have someone pick you up, right? You can order anything and it will come to your doorstep. So it's this world of hyper convenience.
Yeah.
Do you believe that? Do you believe that people are going to be willing to take a little bit of personal responsibility for the benefits of financial sovereignty? And that question, Peter, is something that I've been divided on for a
Yeah.
very, very long time.
You,
So what are your thoughts?
many on this topic, and this is where I think for all of us who are here now, we I think make up the disagreeable minority of the 0.1% of the population who is prepared to self-custody their Bitcoin and believes in this from a long-term perspective. So it's a very small niche of the broader population, and this is where I think the solutions that we're pushing from the 0.1% that's already here, that not your keys, not your coins, you've got to self-custody, is terrifying and unappealing to the 99.9% of the population who's not here. So I look at the solutions that are coming down the road. One of the things that we've got, which helps clients get probably 95% of the way there from a Bitcoin maxi Puritan perspective, is collaborative custody. I think collaborative custody has the ability to help, say, on board the next 10 to 20% of the population. So we're not going to get all the population, but I think a collaborative custody with a collaborative custody arrangement where you've got trusted third parties, and I know that verify, don't trust, verify is a critical component of Bitcoin, full stop. But a lot of people in the world will feel far more confident in having multiple parties who are experts in this domain, who they outsource some level of responsibility to. And this is where, on a personal perspective, this is what we deliver to clients. And so I'm talking my own book, and I understand that everyone on this call, it's really critical that I don't pretend to give investment advice or advice to any Bitcoiner on how they should self-custody their Bitcoin. But I can tell you from a personal level, and 6 or 7 years in this space giving advice to clients, that every one of my clients is far happier with a collaborative custody arrangement because it builds in multiple redundancies that enables them to completely fuck things up and still not lose their Bitcoin. And this is where the not your keys, not your coins, fabulous for those who want the self-responsibility and the accountability to have full control over it. But understanding that most of the population is not there yet and may never be there, it's important we have solutions that span the spectrum of custody. So
I like collaborative custody for the reasons that you said, right? That there's some people that are just not going to be accustomed to that. Also in the US, I think there's some laws that if you're, I don't know the specifics of it, but let's say you're managing someone else's money, has to be held in a trust. Like it has to be held in some type of environment. It can't be held, by the financial advisor, by the person. So it's like legally, in certain situations, it pushes you to that collaborative custody model. Now, I'm assuming when you mention collaborative custody, you're talking about multi-sig
Correct.
between different institutions. But there's only a handful of companies that do that. So there's Nunchuck, there's Unchained, there's Casa.
Yep.
Swan is about to roll out their own version. Really looking forward to that as well.
Can't wait to see that.
Like they're amazing products, all of them, right? But
Yeah,
there's really not that many options at the same time.
agreed.
But I do agree it solves a major issue because it removes the moral hazard, like because that's the fundamental issue is the moral hazard of let's say your Celsius or your FTX, right? And you're looking at this mountain of Bitcoin,
Yeah.
and you're looking at that and you're like saying, like, look, I'm just gonna take some of that, speculate with it. I'm gonna make a return for myself, but I'm also gonna make a return for my client. Everyone wins, but they never incorporate the bear market into that
No,
equation.
no, they don't.
So I guess that's what you're referring to, correct?
Correct. And this is how, like, to sort of explain how the collaborative custody works with us. We use Unchained, we use Casa, we use Nunchuck, and we do that in collaborative custody where, say, the software provider being, say, Unchained or Casa, Nunchuck, they hold a key. We set up a hardware device for the client for them to hold a key, and it's their account, so they've got full control over it. And then we hold a default key in the event that basically they lose their key, or alternatively something happens. There's always a way to recover their Bitcoin and move that to an alternate multi-sig provider. So, we're comfortable with the trade-offs we've made, and I think it's critical to understand that there's no solutions, only trade-offs, and the level of trade-offs that you need to make to get comfortable with. I think, for our clients, they're comfortable with that trade-off. So,
Yeah. And I love how you phrase that, right? Is this idea where yes, there is there's no perfect solution to this, right? And this is a very, very deep rabbit hole. Like I think everyone kind of starts with like a ledger or a Trezor, the 24 words, and you add a 25th word, and then you're like, wait a second, how do I trust the random number generator on this ledger? Let me just roll some dice. Let me cut up all the 2,000 words, put it in a hat, mix it
up.
and pick the words myself and create my own entropy, right? So we all kind of go down that rabbit hole. And I agree, like there is no perfect solution to this. There's just trade-offs. But I do agree. I think that collaborative custody and multi-sig really does solve a lot of these issues. Anyways, so I want to use the last 20 minutes to really talk about Dell and really talk about this Bitcoin price prediction, which is just absolutely crazy. This idea of $7 billion per coin. And let me start off with this, right? So you had Adam Back's famous prediction. I know you know what I'm talking about, which is the $10 million Bitcoin.
Oh yeah, Hal Finney.
Oh, I'm so sorry, Hal Finney.
A month into Bitcoin goes, this could be $10 million a coin.
I'm confusing the Satoshis. I apologize.
Yeah.
And then I didn't say that. And then so you had Hal Finney's original prediction of $10 million Bitcoin, and then you had Adam Back prediction of $8 million Bitcoin, and then I think it was Jesse Myers, BTC Croesus on Twitter. He had like a $10 million Bitcoin, of which that Medium article was reposted by Michael Saylor. So it's like the general consensus in the intelligentsia, so to speak, is this $10 million Bitcoin price target. You're completely just destroying that. You're like, no, that's $7 billion. So how did you get to that number? Does hyperinflation need to happen in order for a $7 billion Bitcoin?
No, it doesn't. And this is where I think, look, probably the most enlightened of all Bitcoiners, I feel, is Jeff Booth, with his,
I agree.
With his commentary around it's impossible to value a new system from within the existing paradigm. And this is where I think he is 100% correct. Then we have Knut with his everything divided by 21 million, which I think is directionally correct. And then I'm a very distant third in trying to bridge a gap and a financial framework / modeling thought experiment to get us to bridge the gap to what I think Knut and Jeff Booth talk about. And this is where The reason for coming up with that business model or that framework for valuing Bitcoin was twofold. Firstly, most people don't really understand the upside that's left in front of us. Everyone thinks the returns and the best of Bitcoin is behind us, but I actually think the best of Bitcoin is in front of us. And if I gave you the option today to buy Bitcoin, if I could take you back to the year 2009 and buy as much Bitcoin as you wanted, everyone would fill their boots. But my point with building a framework on thinking about Bitcoin as $1 billion Bitcoin is twofold. Firstly, to tell people that today is the day that you can buy Bitcoin in 2009, and there's more upside in front of us than behind us. And secondly, as a way to help people avoid the carnage that comes with investing in altcoins. Bitcoin's a roller coaster ride to riches, and altcoins are a roller coaster ride to financial poverty. And this is where, if people understood how much is in front of us with Bitcoin relative to everything else and on a risk adjusted basis, they'd just buy Bitcoin and we wouldn't have to worry about altcoins and the rest of it. We'd just get on with improving society. So that's, I guess, the fundamental premise of why I talk about $1 billion Bitcoin, is to help shift the Overton window for people to think about Bitcoin could be billions of dollars, and all we need to do is really buy and save dollar cost average in it to get to that valuation. So there are a number of ways to get to that $1 billion valuation. The first and the most simple model, I think, of getting to $1 billion Bitcoin is thinking about, firstly, Bitcoin is the best form of money that's ever been invented. And I'll go into that in the sort of second framework for thinking about Bitcoin. But the first framework is really simple, in that we've got $6.3 trillion of global trade on a daily basis. That includes the Forex markets, the rest of it, which is probably a highly inflated figure, but let's just work with the numbers that you can Google today. My expectation is that once people realize that Bitcoin is the first money that can't be inflated or isn't arbitrary, they will want to be paid in Bitcoin because it's the best form of money ever invented. And so when you have a functioning credit market with a stable coin on Bitcoin, people will never have to sell their Bitcoin. There'll be credit products that enable them to hold on to it forever. And this is where I believe daily global trade divided by the number of Bitcoins minted on the day will work out to be roughly what the price of Bitcoin is on a daily basis. So if we look at those numbers, we have roughly 6.3 trillion divided by 900 Bitcoin, and that gets us out to a $7 billion Bitcoin.
But what would that put? So like the total global wealth, right, is like, what is it? It's like 900 trillion if you include derivatives. It's like 200 to 300 trillion if you don't. How? Yeah, I feel like that would. What is above 900 trillion? What quintillion?
It's a quadrillion. Yeah.
Yeah. So,
and I think then quintillion. So this is where I think there's a big misconception in people have a myopic view and think, oh, well, let's just say there's $2.1 quadrillion worth of value in the world that needs to be accounted for. That includes derivatives, that includes stocks, bonds, properties, shares, the whole lot. So that gives you a very round number to basically divide 2.1 quadrillion by 21 million, and we get to $100 million a coin. Everyone understands that simply. And probably where you can add nuance to that is thinking about that price is determined at the margin. There's 4 million Bitcoin that are lost. There's 17, or call it 15, 14 million in cold storage. So there's really only 2 million Bitcoin available for trade. And there's 2.1 quadrillion of value. So that basically changes the dynamics and moves Bitcoin from 100 million to $1 billion. I think that's an overly simplistic way of thinking about it. And this is where what's really important to understand from an economic principle perspective is that price is determined at the margin, and market cap of the 2.1 quadrillion is downstream of how price is determined at the margin. And so what I see happening is Bitcoin has the ability to expand the total value of assets globally. So we've got $2.1 quadrillion worth of value in the world right now. A lot of that's made up of derivatives and basically arbitrary shit that we can't really touch. Debt products, instruments, credit, collateral, the rest of it. And this is where Bitcoin, I think, has the ability to consume tens, if not thousands, of quadrillions of dollars worth of value and store it there. And that's not going to change how much is available in stocks, bonds, property, and the rest of it. But it's just going to expand the pie dramatically because the market cap of total assets globally are going to be downstream of the price determined at the margin.
Interesting. Okay. Wow. Okay. That is very, very interesting. Okay. Hmm.
So this would all we need to think about conceptually is, at the moment we have $500 billion in the Bitcoin market right now, and let's just say in round numbers the total addressable market is $1,000 trillion or $1 quadrillion. So we have the ability to basically expand Bitcoin 2,000 times market cap just to reach what is available now.
Gotcha.
So
Interesting.
it can go up in value 2,000 times, but there's nothing stopping Bitcoin going up 1,000,000 times from here. And
So,
all
and
it
then,
does is the pie goes from being 0.002% of the total value of assets globally to 99.9% of global assets will be stored in Bitcoin, and then there'll be a little percentage for stocks, bonds, property.
and that little percentage stays roughly the same numerically, but
Yeah,
okay.
but
Interesting.
the value of Bitcoin, we can have millions of quadrillions of dollars in Bitcoin because everyone will want to store their value in Bitcoin because it's the best store of value. Not only is it the best store of value, it's the best mean of exchange, it's the best unit of account. It provides the greatest optionality for all of us. So why would you buy a house when you can buy Bitcoin? And this
Yeah.
is where Bitcoin can take on huge amounts of the world's wealth. It can store 99% of the world's wealth or more,
Yeah.
because people will want the optionality of being able to buy a house or buy a boat or buy a car or buy education or buy whatever. And because that's the best asset, that's going to appreciate the fastest.
Gotcha. Interesting. Very interesting. It's the first time I've heard that. A lot to unpack there. How long do you believe this process is going to take to play out? Right. So you have ARK Investments predicting, and other. Someone commented, Nico's mind is expanding. Yes, my mind is expanding. Literally, like Bitcoin in the future, it's expanding in real time. So how long is this process going to take to play out? You have ARK Investments, Kathy Wood, bullish prediction, thinking 1.5 million by 2030. The more conservative prediction. I think it's at 258K, and the
Mm.
base case is around 700,000 by 2030. Then a lot of other intelligent people are also predicting around a $1 million, 500,000 to $1 million Bitcoin by 2030. So, but $1 million to $7 billion is a very big jump. So, is this a multi-generational thing that's going to play out? Is this going to happen very, very quickly? And I'll add my own little opinion on there.
Mm.
I think with the current U.S. debt and their expenditures and the interest of which they owe for that debt, um, that is not a sustainable model 10, 15, 20 years from now.
Mm-hmm.
So I really believe something's going to break. Um, with all that said, like, what's your take? How long is this thing going to take? How long is this going to take to play out?
I, I think the US can go on for a lot longer than we think. So
Okay.
I never rule the US out, and I'm rooting for the success of the US. I want you guys to win. I think you're a beacon of hope for the rest of the world. The rest of the world looks up to you. Not only is there, it's the number one place that people want to migrate to. It's the number one place for capital and property rights. So I'm invested in making sure the US wins this. But that show can go on for a whole lot longer than we could ever dream of. But what fundamentally happens when the debt rises, there then becomes a collateral problem. And take a sort of that discussion that we've probably all heard about, that nation states have a problem when they reach 130% debt to GDP levels. Because the US is a global reserve currency, that's meaningless. It's a meaningless metric to look at, but it's important to think about how they adjust, and how they can create growth on the back of it. What happens when we reach those debt levels across nation states and indebtedness across corporate and personal, as well as governments? There needs to be a re-rating of the collateral. Now, one thing can happen. You can pay that debt down and take it from 130 to 20%, or you can just inflate the assets so you've got effectively a 20% LVR, loan to value ratio, or indebtedness. Now, it's far easier to just inflate the assets than it is to pay the debt back. So my expectation is that Bitcoin's going to be a beneficiary of the underlying collateral of these debts basically inflating. That's my bet.
Gotcha. Interesting. Okay. Um, I do agree, but here's the thing. Yes, they can get away with it as long as they're the world's reserve currency. Everyone's holding the U.S. dollar. How
Yep.
long is that going to be the case, right? You have the whole
Well,
thing about BRICS, and then you have, and of course this is just like sideline stuff, but clearly China, Russia, a lot of other countries are, they feel the injustice of the money printing. They're like, this is just crazy what they're doing. Why are we using these dollars? Uh,
well, let me coin a term that I think everyone should incorporate, particularly in Bitcoin land. It's only a rort if you're not in on it. That's why Russia and China are shitty. It's because they don't get the privilege. So, you know what? They're not a great custodian of global reserve currency. And as egregious as some of the things are that the US has done, and the money printing, particularly that we've seen over the last 3 years, is as distasteful as it is. The US has been the best custodian over the last 100 years of a global currency. They've done a better job than any other nation state. So, to coin FOSS, it's the cleanest dirty shirt in the pile, and it literally is that. So, this whole BRICS thing, I find just, as a, I live in Australia. Our major export is to China, and our largest exporter is BHP. They basically, for the first time in history, accepted a contract in Chinese yuan, and I'm thinking, no one wants yuan. Like, if you think the US is bad, the Chinese yuan's even worse because they're running two sets of books. They've got an internal set of books, which runs the internal money of the country. But if you want to export anything, well, you use the external books. And I'm like, people who are running two sets of book are running a rort, and China's doing it on a nation state level. So I'm like, no one's trusting that currency. And then
yeah.
Russia, they're kind of in a pickle at the moment. They're not politically, they're persona non grata on a global scale at the moment. And, no one's taking the Indian rupee. And you look at Russia, they're already trying to sell the Indian rupee and back out of what they've got. So, for the foreseeable future, it's the US. And when you look at actually the bond markets, the US is paying 5.5 off the bat. Europe's paying 3.5, and they've got inflation at 7 or 8. They've got real rates of -4%, and the US has got real rates of +2. Your currency's golden for the foreseeable future.
Gotcha. Interesting. I love the different things, because you hear it from all the macro heavyweights of Bitcoin Twitter, and they're like, the dollar, it's over, it's done, it's this, but from your perspective, it's like, no, it's still a long way to go. Anyways, so I kind of want to go back to this, and we are getting to the top of the hour, and I do want to be respectful of your time. This idea of $1 million Bitcoin by 2030, $500,000 Bitcoin by 2030. Now, I know that you cannot give financial advice, so this is not financial advice. This is just two acquaintances, hopefully one day friends, talking about the potential price of Bitcoin in the future. So do you think, and then my follow-up question to that was the idea of the $7 billion question, the $7 billion Bitcoin. So from $1 million Bitcoin to $7 billion, that's a huge gap, right?
Yeah.
So is this a multi-generational thing? Is this going to take decades? Is this going to play out very, very quickly? What's going to happen in your opinion?
I think it'll play out a lot quicker than we think. We're only one nation state away from setting a floor of Bitcoin at $1 million. And this is where, listening to Foss, who I consider a friend, even though we haven't spoken so much, but I've listened to so much of him. You can make price predictions with no time limits, or time limits with no price predictions. To give you both, and just ignore that advice because it's fun to speculate. I think Bitcoin will be 10 million US a coin by 2030. And I think we'll have $1 billion Bitcoin by 2040 in today's terms. So, for me personally, I think, there represents huge upside, and the risks are, completely overstated. People confuse risk with volatility. Risk is completely different to volatility. And yes, although Bitcoin's volatile, I think it's the risk-free asset of the world right now. So I think the asymmetrical upside to Bitcoin over the next sort of 7 or 8, even 10 years is a bet that you can't ignore, and basically just get some.
Yeah, just get some, just in case it catches on. And I'm glad to hear that you and Foss, next time we'll put you and Foss together, and we'll do a Simply Bitcoin IRL between the three of us. Anyways, Peter,
I love that. Thank you.
Peter, it's been an absolute honor. Thank you so much for joining us today on Simply Bitcoin IRL. I put Peter's handle and his website on the screen, guys, for you guys to check it out. But Peter, in case just for our audio listeners, why don't you tell everybody where they could find you on the interwebs?
In the interwebs, well, there's a website, thebitcoinadvisor.com. That's advisor with an ER. My handle on Twitter is probably the best place to catch me, at Peter BTC Advisor. And any questions, please reach out. Love to help you, and appreciate your time, Nico, and big fan of the channel. So thanks for all the hard work you do in educating us all.
No, appreciate you, and the honor's mine. Thank you, Peter. Hang out backstage for a second while I wrap it up. Guys, thank you so much for tuning into another episode of Simply Bitcoin IRL. Special shout out to our to the Bitcoin company that powers the show, Swan Bitcoin, best place to build your Bitcoin stack. We'll be back tomorrow in the live show, 12:15 p.m. Eastern Standard Time, for another episode of Simply Bitcoin Live. We'll be back with an IRL next week with a very special guest. I'm sure you guys are going to enjoy that. But until then, enjoy your evening. Peace out, guys. We'll see you tomorrow.